The clock is ticking, global markets are on edge, trade negotiations are ongoing, but the finish line seems miles away. The United States had hit pause on a wave of tariffs. This pause, a 90-day reprieve, is set to expire soon. Early July is the drop-dead date. No one is sure what will happen then. If no deals are struck, the tariffs are back on. The threat hangs over everything. The stakes are high. These aren't just numbers on a spreadsheet. These are real products, real jobs, real livelihoods. Businesses are nervous, investors are jittery. The uncertainty is toxic. The lack of progress in negotiations is fueling the fire. The G7 finance ministers are meeting. The world waits with bated breath. But no one expects a breakthrough. Not yet. The issues are complex. The players are entrenched. The rhetoric is heated. It's a game of chicken with the global economy hanging in the balance. Japan's stance is clear. Remove the tariffs, no ifs, ands, or buts. They see the United States tariffs as unfair, a burden on their economy, and they're not backing down. This demand has become a major sticking point in the trade talks. The United States is hesitant to give in. They see the tariffs as leverage, a way to extract concessions from their trading partners. Something's gotta give. The question is, who will blink first? The outcome of this standoff has far-reaching implications. It could set a precedent for future trade negotiations. It could strengthen or weaken the global trading system. The pressure is on. The world is watching. Moody's, the credit rating agency, dropped a bombshell. They downgraded the United States credit rating. The news sent shockwaves through the markets. Investors panicked, dumping United States assets. Stocks tumbled. The dollar took a hit. But then, something interesting happened. Asian markets, after an initial wobble, found their footing. They stabilized. Why? One reason is the steady performance of United States Treasury yields. Investors still see the United States as a safe haven, despite the downgrade. European markets, however, are a different story. They're expected to open strong, but all eyes are on the trade talks. Any sign of progress could trigger a rally. Any hint of bad news could send them spiraling. Jamie Dimon, the CEO of JPMorgan Chase, is a man who understands risk, and right now he's sounding the alarm. He sees extraordinary complacency in the markets. Investors, he warns, are underestimating the risks. Inflation is lurking. Stagflation is a threat. Credit spreads are widening. These risks, Dimon argues, are not fully priced in. He's particularly worried about credit. Credit is a bad risk, he says. Dimon's message is clear. Be careful out there. The markets may seem calm on the surface, but there are dangerous currents swirling beneath. Investors who ignore these warnings do so at their own peril.